Well, I think it makes a difference. I mean, I know gold's been down, turkey's been a seller. I mean, there's certain things that have been going on, and I don't know if you recall, but the last time I talked to you, at the very end of 25, early 26, we sold a lot of the miners, almost all of our silver, and a little bit of gold. We keep most of the bullion though, but it doesn't look like to me right here. Okay. Now, don't get me wrong. Long term, we're all over gold. I mean, we're fine. But in the short run, you see a lot of people when you got up to around 4,500, 4,600, and ran on into 5,500 on gold. You picked up the momentum crowd on that trade right there. And I think you have to get enough selling now to get rid of those momentum people, and that's probably going to mean another 500, maybe as much as $500 down from here. 4,000 or lower. But if and when that happens, and I'm not saying it will happen, but if and when it happens, that's where, you want to be a pretty good sized buyer of gold. Now, we still own part of our miners, gold miners, but we cut back on a number of things. And we just feel like it's not the time for that quite yet. I'll put it that way. Well, Jeremy, for the last couple of years, we've thought we've had a fairly high concentration to energy. Probably a lot more than anybody else. And what I think people miss about that is these companies were so cheap relative to what you could make out of them that it didn't make any difference what oil did. Oil could stay at 70 or it could be at 80 and you'd be okay. But then all of a sudden, you start to realize that, we're using a lot of this stuff and we're getting down to that point where it's probably going to get kind of sticky. And so oil, I said a year and a half ago, and I got a lot of booze on this one, but I said, oil could go to 150. And that was when it was like 60. And people thought this guy's completely crazy. But the point I was making was oil, like any commodity, comes and goes. And I think people are missing the point here. No matter what happens, I think we've been, 80 days down over there in the Straits. This thing's going to get sticky here, really, poorly and soon. And I think people that don't have a fairly high allocation to energy are going to miss something here. Because right now, if you look at energy, it's the best of the pack this year, even better than tech. I mean, just take it from January 1 to now. And so a lot of people are missing that. They don't have an allocation to it. They're over buying these big seven on a trade, but all the while energy and the things that go with energy are just steadily going up. And I think that's what they're going to miss this year on that trade. Well, while I'm not somebody like Jeff Curry that can give you the exact numbers, I will tell you this: a lot of things have been blown up and disrupted. It's not like you're going to go back tomorrow and everything is going to go back to normal like it was before. It's not going to be that way. And I think that's what the street is missing. And once they realize that in the next 3 to 6 months, I think you get another leg up on oil because they'll finally figure out that, hey, and maybe the Straits never go back like they were. Obviously, it's been 80 days and nobody's been able to get it fixed yet. So, who knows? Well, it's helped us in the West as far as the U.S., as far as pricing. But I think people forget that these big countries will figure out a way to get oil. China will figure out a way. I mean, they're fairly close to Russia. They could just drop a pipeline in, and they, unlike a lot of countries, they can build that pipeline in a hurry. And so, there's a lot of ways they can do things that I think people forget that are capable of making things happen. And for the U.S. to think that, hey, we're just going to control everybody else in this area, I just don't think we're really looking at that clearly. I've been at this a long time, and I get a pretty good sense of where the momentum people are, and what you want right now in gold and silver is you want to flush out those people so they're not there anymore. And it probably means lower prices to an extent to get rid of those people. And I think, like, if you'll notice, all the miners which ran up, had the momentum people still around. We sold a lot of the miners in the very first week of the new year, and they've corrected and they rallied again. But to me, that was momentum type stuff. But now they're giving it back. And so if you take the new lows at this point, see, that takes those people and they say, look, this thing's done. It's not going to work, which is about the wrong time to say that. But you have to watch that group and see where they are, particularly in the metals. Yeah. But I do think, and I'm thinking, for people that are looking out, 2 years from now, you need to own some gold. more than likely. I mean, you should. Well, I think all the miners are getting cheaper. Now, don't get me wrong. I mean, we've owned Agnico Eagle for, I don't know, 4 years probably. And so we have some real low basis in some of these things. And so when you're looking at these companies, for us, I mean, if you're looking at gold, you look at Agnico, you look at Alamos, those are really good gold companies now, but they're getting selling right now. That's my point in those. On the silver side, this Hecla is a great silver miner. Again, getting selling, and so you have to wait that stuff out really, because if you look at the big names, the big Newmonts, Barricks, all that stuff, they're coming back. They're settling back in price, and you sort of have to wait till that's over if you want to buy the miners. Now the miners will go more than the bullion once you get it rolling. Right. They're still cheap. Relative to 2011, they're still real cheap. Well, the biggest thing is, what does it cost you to lift that ounce of gold relative to the price? And that spread today is the best spread they've ever had. I mean, it's huge. And that's why these companies are making so much money. Now, you're getting the announcements right now on these companies are really good. They're saying, hey, we did this, we did that. And that throws a lot of people because the price is coming down. But it's just a matter of time. You wait on these things. And I still say the miners, if they sold today, Jeremy, at the same price to cash flow that they did in 2011, these things would be 200% higher from here. I mean, they're cheap on a relative basis. Yeah. Even though they're probably going to come down a little more.
Still very bullish long term. There's been no change in any of the debt scenarios that I've seen, inclusive of what we're seeing in Japan, which we'll talk about in just a little bit. But really, unless there was a big U-turn in the U.S. government and central banks around the world and other governments, gold is the long-term asset, along with probably silver and other precious metals, that really will give people that security that they crave. Now, in the short term, there's a different story here. And the different story is that we're now in a short-term downtrend, and the chart clearly shows that with highs, lower high, lower high, lower low, lower low. And you can see how gold continues to react as a risk asset. And again, historically, Danielle, you know this, it's really not a risk asset, so it shouldn't be behaving like one. And that tells me that investors, people have gotten into this trade that normally wouldn't buy gold. They got into it for momentum, and it needs to flush those players out. And so I'm still overall short-term bearish. I still think we're heading down sub 4,000, maybe even as low as 3,500. But yes, I certainly am going to be a buyer when it gets below that 4,000 marker to add to my long-term holdings on gold. That's what it is. And again, anyone who's got a long-term, listen, if you're in it for a quick buck, then yes, you're going to be disappointed. But if you're in it for the long-term like I am with my longer-term holdings, it's just part of the cycle, right? You have these massive moves to the upside. And if we zoom out on the chart, I mean, really, we've been rising since 2022 when we were trading around 1,600. And even if we pull back to 3,500, I mean, think about this. 2-3 years ago, if someone said 3,500 gold, we would have all been ecstatic. So you have to let these cycles breathe. I know we all want to become zillionaires overnight, but charts just don't work like that. And if we look at this, right, we're only talking about a drawdown off the highs from that 2022 low of basically a retrace between 50% and 618, right? So, I mean, it's not a massive reversal. And in markets, if you look at NVIDIA stock, if you look at the S&P, if you look at even Bitcoin, these type of reversions are very, very normal when things get overdone to the upside. So think about it like this. You ran a marathon in gold. It now can't run another marathon without having a heart attack. It needs to rest. It needs to refuel. Then it will go on its next leg. And it's on a very short term, like next few days. What we can see here in the chart is that it's hovering right on this short-term support level. So again, if you're a bull, you really got to see this $76 level hold. If it breaks 76, it likely tracks down to this 64 to 66 level. And if that breaks, which the pattern insinuates it will eventually, you're headed to basically $50 or just sub $50 silver. And again, to me, this is just the normal breathing of a normal chart that it gets overdone to the upside. But I understand people that bought in north of $100, they're feeling the pressure. I mean, they'll be down 50% at that time. And I think it's important for people to just recognize again is that, going back to these monumental runs is that the narratives will shape the run, right? So we heard about the discrepancy in how much silver was out there. We heard about the silver contracts not having enough silver to actually meet that. The demand, obviously, China was cutting off supply. All of those were fitting that monumental surge up. You can't chase it. I know it's in human nature to buy in and let emotion to kind of take over, but the way I look at it, and I hope people realize is that there's always another trade or investment around the corner, right? In a month, we'll be talking about something new. And if you just wait, it generally will turn out better than if you chase some of these massive runs. Trillions and trillions. I mean, at this point, so much more debt. I mean, think about the US alone already paying 1.2 trillion a year in interest payments. And again, if we were to allocate that wasted money in interest that we're paying to, you could pay for everyone's health care, you could pay for, well, Social Security. I mean, there's so many things that you could do. And essentially debt and paying interest ends up sucking the life out of an economy. And the more debt you have, the more it weighs. Think about another bag on your back, another weight on your shoulders. And as an economy, it is unsustainable to get to these levels where we now have so much debt. There's no way that we'll ever pay it off. I mean, literally, there's no way. They're talking about a 5% billionaire tax. It doesn't even matter at this point. There's no way to really pay it off. It all ends in a massive collapse that likely the bond markets are signaling with